All right. What is up, tycoons? What is up, traders? Going to give you guys an update on JASMY real quick, ticker symbol JASMY. And we've had a great breakout. Okay. Really, really nice rally. And we're going to see if we can possibly hit some of our price targets up here at 0.0067. Okay, we're looking to see if we can come into this overhead supply zone right here. These are going to be our bullish price targets, but we're going to break down some of the different ways and strategies that you can help navigate the battleground and the battlefield of cryptocurrency and trading in the market. I like to say trading is like going to battle. It's like going to war. You need to have the proper weapons and you need to know how to use those weapons to your advantage. So that way you can increase your odds of success on the battlefield. So what we're doing is we're going to look at the three major Fibonacci retracement levels, why these are so important. We're going to take a look at the MACD and as well the relative strength index. By combining some of these three things together, you can start to get an inference and really start to give yourself an edge in the market because you're not going to be successful without an edge. Now, none of this video is financial advice. This is all actually going to be informational, and you'll learn a few different tips and tricks that you can use, as you navigate the space. Okay, so as I mentioned, we're going to look at the fib retracement levels, right? So let's take a look and let's just go over how those work. So nothing moves in a straight line down, nothing moves in a straight line up. What they do is you come down, you retrace, and then you continue that move. Or you go up, you retrace, and you continue that move. Now, if you break through those retracement levels, that's when you can spot a reversal, okay? So what we're looking for here is we're looking to see, are we going to break through our three major retracement levels right here from taking this swing high, all right, connecting it down to the swing low. You see, we have the move down, we have a retracement up towards our 50% level, and then we actually continue the trend, right? So this is a very easy way to spot and identify a trend continuation or a possible reversal. If we would have broken through these levels, that's when we could have looked to make a reversal and made a high and then a higher high. And we look time and time again, that's what we've done. We've come down, we've retraced up to the 50%, and we continue heading lower, right? Come down, we retrace up to 38.2, head lower. Now look at what we've actually just done recently. We just broke through our three major retracement levels. And sure enough, we got a reversal and we created a higher high, right? So the trend was high, lower high, lower high. But we broke through these three major retracement levels. And now that we've broken through them and we're able to get past them, we have started a new trend, a high and a higher high. So the next thing we're going to look for is going to be higher lows, right? So we have a low here. You see, we're creating lower lows, right? We have a low, lower low, lower low, lower low. Now what we want to do, we've already put in a high and a higher high on the daily time frame. We need to put in a low and a higher low. So just like you can use these for resistance, okay, now we're going to look and see if we do get a retracement, these are now going to be our support levels, right? So we're connecting the swing low up to the recent swing high, and we could get, kind of like a three-wave move up here to our overhead supply zone. Those are going to be our price targets, right? So the three major support levels, if we do start to pull back, and as you can see, we do have a doji right here. It just flipped from green to red. So we are getting a little bit of a pullback, but we really want to hold 0.004388, 0.004073, and 0.003759. Now, we're going to go over the MACD and the relative strength index, okay? Because you can also use this to help spot entry and exit signals, okay? So for the MACD, an entry signal is going to be when this red line here crosses above. When the red line crosses above, that's an entry signal. And then an exit signal is going to be when the red line crosses below, all right? So like right here, we see the red line starts to cross below, okay? And we end up getting a push downwards. Over here, we see the red line comes up, all right? And then we get this nice move to the upside. And this happens time and time again. Over here, you get a MACD entry signal, okay? And then we have a nice little move to the upside, up to our major retracement level. Over here, we have another one. You see, we get a MACD buy signal. We come up, we get a nice move up to a major retracement level, and so on and so forth. So pay attention to the MACD. We're gonna need to be cautious of a MACD crossover to the downside. That's going to be a possible sell signal and possibly an exit signal, right? So we don't really want to see the MACD red line cross below. If we do get a pullback, we just want to see it kind of consolidate a little bit, right, and stay above the white line. Now, the other thing is the relative strength index, right? And you can use this to actually spot what's known as divergences, okay? So in my last video, I gave you guys, the multiple bullish divergences that we ended up having. All right. If you're not familiar with that term, I'm going to explain it very simply, right? It's very easy to spot. So you have a low here, you have a lower low here, you have a lower low here. So we have 3 lower lows. Okay. Well, look at our relative strength index down here. We have a low, we have a slightly higher low, and then we have a higher low right here. So the relative strength index is having a divergence because it's clearly in an uptrend, making higher lows, while the token itself and the crypto is dropping in price, creating lower lows. It's bullish divergence. It's an indicator you may see some bullish activity, right? And so each time we got a little bounce off of the bullish divergence, right? We had a low, lower low, made the low, slightly higher low. We got a slight bounce, right? Same thing. We come over here, we're creating those lower lows, we're creating higher lows, and what do? We get another nice little bounce. You can never predict how much of the move is going to be off of the bullish divergence. It may be a 5% move, it may be a 50% move, okay? But it's just something that you can use to help spot possible entries and exits. And so what do? In the last video, I said, hey, there's some bullish divergence right here. What we're going to do is we're actually going to slide it over here to where we actually made the lower low, our new low, and put it in a new low. And let's take a look at the relative strength index again, right? So here we have a low, we have a lower low right here. And what do we see? Low, higher low. So, we broke this initial bullish divergence, right? If you look, we kind of broke that trend line and came down. And then that's when we also ended up pulling back in the market, right? Let me actually extend this a little bit so you can visualize it a little bit better. But if you want to maintain, the bullish divergence and any hope for any bounces, right? What you're going to look for is you're going to look for it to continue to bounce off of this trend line, right? So notice how we get the bullish divergence right here. Okay, we start the bullish divergence, we get a little pop, we pull back. What do? We're still holding the trend line, right? We pop a little bit, we pull back, we're still holding the trend line. Once we broke that trend line and flipped it to resistance, okay, that happens right here. So here we break through the trend line, then we flip it to resistance right here at this moment, and then we got a sharp move to the downside, right? So that's kind of how you use the bullish divergence and what you're wanting to look for, right? You're wanting it to keep bouncing off of the trend line. And once it breaks that trend line, then the bullish divergence trend has been broken. All right. So it's very simple to look at, very simple to use. But also you want to pay attention to overbought and oversold levels. So, over here, we were oversold. Oversold is going to be below this dotted line right here, which is 30. And then overbought is going to be above 70. So, typically when something is overbought above 70, and you can see right here, we're trading close to 80. You do see a pullback, right? Now, just because something's overbought doesn't mean that it can't end up going higher, right? It just means that, hey, maybe there's going to be some type of a healthy pullback, aka a healthy retracement. So wrapping everything all together, what we've done is we have our 3 major healthy retracement levels, the 3 most respected and well-known. Okay, if we get a pullback, we want to hold these levels and flip them to support and hold them as support to continue a push up higher and create a high, a lower high, or I'm sorry, a higher low, right? So, we've already made a high and a higher high. We have a low. We want to establish a higher low somewhere in these areas. And then we want to keep making higher highs. That's how we're going to continue a bullish trend in JASMY. There's no guarantees. If we come through, right, and we break through these levels, that's when we could see a reversal and we could come back to retest some of the recent lows, if not make newer lows. So that wraps up our video. Appreciate you watching. Smash the like button and subscribe to the channel if you guys are new, and I'm out.